If you have a tax-specific question, see your own tax advisor about this, see your own investment advisor about this. If you want to see Loren as your investment advisor, then his contact information is already in the video description. And so we're going to go ahead and get started. And we are going to take questions from anyone out in the audience. The audience is always real small at first, Loren. It kind of builds over time. And there's actually a little bit of a delay. It just popped up on the YouTube side right now. So so as things get started, you should see people more and more start to show up and questions start to be asked. But I want to start where I know everyone wants to start today, and that is Tesla's earnings.
Okay.
Martin Cusano says hello. Let's see.
Hello.
Yep, he's actually one of the members of my Patreon group and a frequent contributor in there. Thank you very much for being a part of our Patreon group. You guys give me a lot of really great ideas as far as what videos to cover. So lately, I've been exploring some other ideas and have not been so heavily into electric vehicles. But I did take a look at the investor deck for Tesla, and I gotta say, man, there's nothing on the planet like a Tesla bear. These people just don't learn from experience. I mean, I think more money has probably been lost by Tesla, by people shorting Tesla, than any other stock on the planet. They just keep defying expectations. They absolutely just keep defying expectations. So
I'm not surprised that they do. I'm a big, huge Tesla fan. If nothing else, I mean, if you look at the companies that have grown and continue to grow exponentially, like Apple, and you have a visionary leader that starts the company, a genius. Some people say that the founder of Tesla is an alien. I mean, he's got so much insight and raw intelligence, and he's so innovative, and he's so visionary. How it's hard, I think, for a company to not do well. You
gotta be careful, Loren. I made a similar statement earlier this week on my YouTube channel, and someone accused me of sounding like a cult member. But look, it is true. Elon Musk is just so smart that he makes very smart people look kind of stupid.
Right.
So I'm a little bit like I have the same sort of vocal mannerisms that he does. Like I just don't know when I'm making people uncomfortable sometimes. Right. But he has this problem where he can be very, very intelligent, but he's not very persuasive because he tends to insult the people as he's correcting them.
Right.
So they stop listening to what he says. I think you really have to pay attention to the content of his conversation here and understand sort of like the overall aim of where he's going with his company. And so you notice a couple people have talked about Sofi here. They're making comments here on the live stream. So Sofi, do you know who Sofi is?
Yeah. It's software. It's an app, a software app that kind of consolidates. I'm a big fan of those as well. I mean, I'm not an expert on Sofi per se, but those kinds of applications that kind of consolidate everything.
Yep.
I think it's helpful. We do it ourselves. We have in our platform, right?
We do. So. And I've been a big proponent of Sofi from the beginning. Before they were public, before they merged with IPOE, which is one of Chamath Palihapitiya's SPACs, and they went through a period where they're down, like really, really down. I kept acquiring shares, kind of lowering my average. And I just like last week, I finally just passed over. My head's finally above water. But I have a real long-term, like all of my investments, my personal investments, I have a real serious long-term vision, like 7, 10, 12 years down the road. Sofi's flywheel strategy is starting to pick up steam in terms of the number of products sold, the depth of relationship they have with clients, meaning they have more than one product with each client. It makes the relationships a lot stickier. And they also have, so I actually just started transferring some of my own portfolio over to Sofi, meaning I'm actually going to start using some of their business solutions. I dropped, I guess this is kind of an announcement. I dropped Webull and I'm moving some of my funds over to Sofi here. The reason I dropped Webull because I cannot get them to stop charging me, paper fees. They keep saying they can't deliver to my email address, so they keep charging me a $2 fee every time I buy something and every time they print out a statement. So I just said, forget it. I'm going with SoFi. I talk about them so much anyway. Why not put my money where my mouth is? Also, there's an affiliate link for that in the description too. I did plan on that. I literally opened this up today. So click on the link. If you open up the account, put $100 in there, you'll get $25 of your favorite stock out there. And of course, I get $25 of stock too if you do that. Anyway, so we'll talk about SoFi a little bit more. More people will probably mention it just because it's gone up so much. But let's go back to Tesla here just for a minute. Nicholas Loren says, so Michael Burry was wrong. This is a legendary guy. So Nicholas is not a native English speaker. So if you didn't understand that, he's saying that guy's a legend. He is, but I think that the bet that Michael Burry made was mischaracterized by the media. He didn't really. He had a trade that was done, but he didn't short Tesla into the billions or anything like that. He was literally just a couple $1 million in short, and he exited the trade at a mild loss. So it wasn't a huge amount. So people lose money trading all the time, especially if you're a frequent trader. Michael Burry is not going to be any exception to that. So, yeah. So back to Tesla, though. When we take a look at Elon Musk's overall aim, his overall aim is really to take humanity off of a carbon-based economy, right? It's not to build a car company. It's not to it's not to make money. I mean, the guy lives in a $50,000 house in probably one of the poorest regions of the country right now, which is South Texas. I don't know if you've ever been to the Rio Grande Valley in Texas. On paper, it's one of the poorest regions in the United States. In reality, there's tons of drug money there, but on paper, it's one of the poorest places in the United States. The guy doesn't care about money. He has aims that are different than ours are, right? So when I think about the direction the company is going in, I still see a ton of value in buying Tesla shares, even now at $860 something a share. I think that 5 years from now, these shares are going to be worth $3,000 or $4,000. And that's my estimation of what they're going to be worth without full self-driving. I'm not planning on full self-driving ever being as big as everyone thinks it's going to be. I don't know. What do you think about that?
It may morph into something else, but I think it's going to help us. I mean, the whole goal of Tesla's, driverless foray was to kind of cut down on accidents, right?
Right.
Because computers supposedly and machines supposedly more accurate than an individual. People fall asleep, the whole 9 yards. So maybe it won't be 100% driverless, but it can help us prevent us from getting into accidents. The whole thing about Tesla, it's got a couple things working for it. Number one is that people buy stocks based on their belief in a company and the company's goals. They're buying the future. People have that expectation that hey, he's so innovative, and I'm buying the future right now. I'm getting in on the ground floor. The other thing is that he backs up what he says. His company has real products.
It does. So
that work, and sometimes they don't work when they first come out. I mean, how many times did you hear about the exploding Tesla car or whatever?
Well, that's the thing. He has
this happens with all things when they first come out.
He has the ability to use his customer base as beta testers. Right. I mean, the cult is so strong that he can put out a product that he hasn't finished testing, and people will be happy to buy it. Right.
Yeah.
That's the amazing thing. So, and I know a lot of people always talk about Elon Musk and his promises. Like, look, he delivers on his promises. He just doesn't do it on the timeline that he promises.
Right.
So he always accomplishes what he said he's going to. He just doesn't do it when that initial target date was set. I think everyone's a little bit disappointed right now with the Semi and the Cybertruck, but according to what we heard on the investor call today, that has everything to do with the availability of battery cells. They're moving into that 4680 battery cell production, getting away from the 2170, and worldwide they're just ordering the battery cells right now to produce a Cybertruck or a Semi in volume. Do you know anything about Tesla's insurance program?
No.
Tesla's insurance program has basically, they could end up, and not just them, but whoever else ends up with full self-driving technology or anything close to it, will probably end up destroying the auto insurance industry. The auto insurance industry better start investing heavily into companies like Tesla, into companies like Waymo, if you were on today's shareholder call, you would have heard them go into depth in a little bit of how Tesla's insurance is working. They just put out a pilot program here in California. They have a program, and they're actually selling the insurance in Texas right now. One of the problems, of course, with insurance, as you know, is it has to go. It's regulated in all 50 states separately, so it has to go through the approval process in all 50 states. So it's approved in a couple of places. So it's driver-specific pricing based on the safety characteristics of you as a person. So for me, because I basically am half asleep while I drive, this would be a terrible way for me to go, right? I want all those good drivers subsidizing people like me because I'm a bad driver. I want all those good drivers subsidizing me, and it keeps my rates low. But the reality is the entire model of auto insurance, the way we have now, is actually based on a lack of information. Now that we have all of this driver-specific information from your car recording things that you do, we're going to radically be able to reduce the cost of insurance for good drivers and make bad drivers actually pay what it costs to insure them based on the likelihood of them getting into an accident. So does State Farm collect this data now? No. Does Farmers collect this data? Does Aflac collect this data?
I think if they're not, they have a way to collect some type of data. They're moving in that direction. They may not be moving as quickly as Tesla, but
no. But the companies that are going to own that data now are the auto manufacturers, and they're going to have to find a way to partner with the auto manufacturers. And that's going to be one of the ways that these manufacturers raise money. It's going to be from the insurance industry. They're going to have to, or the insurance industry is going to die. I mean, they're going to have to pour billions of dollars in auto insurance companies. They're going to have to pour billions of dollars into these new EV companies, which are far less in the way of hardware companies, right? Like manufactured cars. They're more software products and things like that. They're going to have to start pouring billions of dollars in there just in order to stay relevant. So I'm really, that's a very boring subject, auto insurance. It could turn out to be a massively lucrative part of the business.
Yeah, so, maybe so also, but it's just like everything else with Tesla. They've innovated and they've created new things and challenged the status quo in so many different areas. But what has happened is that the status quo has come to do what Tesla has done. So I see the insurance companies as aligning with Tesla or doing something that Tesla's doing.
Yeah, I see trouble for the insurance industry. I really do for the auto insurance industry.
And it's a challenge, but I think they'll rise to the challenge. It's a lot of money. Too much money.
It's a lot of money. I think it's poised to be disrupted. I really think that there's going to be a lot of new companies out there, and that are going to pop up. I think the insurance company is going to be forced to buy the data from companies like Waymo, or I don't know if Tesla is going to share that or part with it. I think they quite enjoy playing the role of disruptor, and if they can disrupt the auto industry, they can disrupt the energy storage business, they can disrupt the energy business, they can also disrupt insurance. I don't know what else they're going to disrupt, but I think that's happening. So here. Let's see, we get a question here. Martin Kuzma says, I understand the enthusiasm about Tesla company-wise, but how can you justify the market cap, and at what timeline do you see it getting to 200 to 300 billion in revenues? So I'm not going to venture a guess on the timeline, but I think really it's not just that they're looking at selling 20 million cars in the next 10 years, which, let's be honest, that's a stretch. Right, I think VW is the largest auto company in the world, or something like that, and they sell like 9 million vehicles per year. So they'd have to sell twice as many vehicles as the largest auto producer on the planet. But I think the excitement is auto, energy storage, software, and in that software, I'm putting the insurance business in there. The insurance business is a hundreds of billions of dollar business per year, and I think a lot of people are just ignoring or don't understand what's happening with Tesla. So yeah.
And as far as the market cap is concerned, it's high, like a lot of other companies. Yeah. But again, people are despite the level that it's at, people are buying the future. I mean, there's even a thing where Tesla's coming out with flying cars. Right?
Flying cars, yeah. Well, they're not the only one.
They're get to that point. So I mean, they're so innovative, and they've proven themselves time and again that that's enough for many investors to drive that stock price up. And even though it may be overvalued, more than selling it much more than what it may be worth, so to speak, it's all a part of it.
So Mark T says, don't forget the taxi business. That is the autonomous taxi business that he's talking about.
Right.
So I live here in Southern California, pretty close to something called the San Diego Supercomputer Center, and I know a number of people that work there. And I can tell you that a lot of software engineers that I talk with, a lot of computer scientists that I talk with, are telling me that full self-driving, in terms of actually being an autonomous and artificially intelligent vehicle, we are pretty far away from that. And that doesn't jibe. So what these scientists are telling me doesn't jibe with what these businessmen are telling me, and what these people these investors are telling me. So I don't count that in my own evaluation of what Tesla's going to do. Like, I don't include that autonomous taxi fleet at this point, which is a big part of Kathy Wood's assessment.
I don't think you should count that out. I mean, Ford is getting into it. I mean, originally I'm from Detroit. I go back and forth. The people in the area can maybe tell you a little bit more about it, but there wasn't. Detroit's been on the comeback. The downtown area has renovated a lot of different buildings. There's one building that was an abandoned train station. Yeah. That has been revamped, and that whole building is going to be the headquarters for Ford's autonomous car.
So the Lightning has really good reviews.
So we may not be that. I mean, I don't know how close. Maybe we're a little bit further away than what's to be expected, but it's coming. Some shape or form is coming.
So the Ford Lightning is supposed to be out next year. That's the F-150 version of an electric vehicle. Right. Ford F-150 is a best-selling vehicle in America, 40 years running. It's not a competition. So I guess what surprised me the most is that, according to some well-known reviewers like Sandy Monroe, Ford didn't screw it up. It's actually a great truck, and it's not just a truck. It's like a mobile power station. Like, you can park it and run all of your mobile power tools off of it if you're a contractor. That's what's so neat about it, right? So, you don't need electricity on the spot. You can just use your vehicle, which I think is super cool. Extended camping trips. And it's pretty amazing what's happening right now. We're in the middle of this giant revolution that I think we're fortunate to live in this time period to get to be able to see. And I don't think I was last year. I stated that Ford was probably going to come out of the pandemic in a better position than it went in, just based on a couple of factors. That actually appears to be true. It was a little shaky for a bit, but that appears to be true now, especially with how much further along they are with the electric vehicle revolution than we originally thought they were. So let's take a few questions here, and I'm going to let you talk about some of these. A lot of these are Tesla specific, which I know that you're not into this as much as we are. But you see, White Wolf says hello from OC. I love the names here. The Epic Hamster. Okay, let me see here. The F-150 is a power station for your house. See, Epic Hamster says the F-150 is a power station for your house also. Tesla needs to offer the same in the future. I think so too. I don't think the design of the Cybertruck is not finished, and I'm not sure that it won't be offered something like that. So let me see here. I'm going to scroll back up to here. Let me see. All right. So I am going to ask you a question now, Loren. In terms of investment decisions, kind of going forward in the future here. We've had a really strong bull market now for quite some time. Numbers actually look pretty good in terms of household income, household debt, the available cash that's out there with people. We're looking at rising incomes. We are looking at inflation, but are we seeing a shift right now in terms of where money is going in the market? Are we seeing a repositioning of funds right now? What do you think is happening, and what sectors do you think people should be invested in for sort of the near-term future, the next 2 to 5 years?
Technology is one of the areas. So, I mean, you leading off with Teslas is a good thing. Mm-hmm. The medical field. I mean, we have a pandemic still with us. money's going to be made. There are going to be companies, insurance companies, medical companies that are going to make money off of that, whether you like it or not, whether
Right.
you're, pro-vax or not, money's going to be made. What's happening with money in the market?
Mm-hmm.
There's a lot of money that's still on the sidelines. There's a lot of money that's still in cash.
Right. That is one of the things that's not talked about on YouTube channels is how much money investors are sitting on and not investing. That's still out there. They haven't pulled the trigger on.
Right.
Yeah.
Which could encourage inflation, but right now, as long as interest rates remain low or almost non-existent, you're going to see the market go higher. You're going to see more people get up off of their cash and put it into something because it's just sitting there. But inflation is something that we should be concerned about. It's a real threat. And the longer we have issues with the supply chain and interruptions in products being delivered, the longer and more realistic inflation is going to become. Longer term inflation. So
I've been of the opinion that inflation is transitory and mostly because of increased demand, pent-up demand, increased demand, and mostly because of the supply chain interruptions. But there's a growing case right now to be said that some of this is going to be permanent.
Yeah.
And do you agree with that, or?
Yes, every day that passes. Hey, if not just in this country. In this country, we are gifted, and we have the luxury of arguing whether or not we should get a vaccine, become vaccinated. In other countries, they just don't have the availability of a vaccine, and some of these countries make stuff for us, right? Mm-hmm. So as long as the pandemic is around and affecting production, we're going to have some lumps in delivery and lumps in the products being available to us. The other thing about it is, of course, you've got the companies that are selling the goods. Yeah. They raise the prices, and even when things get more normalized, they're going to say, well, consumers have been paying this inflated price for a while.
Now they're used to it.
They're used to it.
Yeah.
Why lower it? This is the nature of inflation. This is how inflation happens.
Well, there's enough competition in any space, though. But if there's enough competition in any space, though, there should be a company offering it for less. It'll force deflation once we see normalization of the supply chain. But I do think you have a point. Yeah. So there's a really good question here.
The less likely you're going to have inflation being short-term.
There's a really good question here from Marie L., which I don't know if she's ever commented on a live stream of mine or not, but she says, should I switch from growth funds to value funds? Once again, you can't take this as financial advice, but go ahead, Loren.
That's a tough one. I mean, in the next, 5 or 10 years, I would say, you need both as a diversification method. If you're asking which one is going to do better, I'd probably put my chips on the growth. I think the growth sector, with all of the things, the uncertainties of what's happening now, the pandemic, the supply chain, everything else, will there be inflation? Growth companies, I think, are the better spot to be in than the older line valued companies.
Okay. So even though growth has outperformed value now for about 2 decades, where traditionally it didn't necessarily do that, you still feel like growth is a better place to be?
With the current landscape, yes. That could change, but I mean, look at stocks now. I mean, is there a value play now? I mean, a lot of stocks you could argue are overvalued. Are there some value plays out there? Yes.
So I'm looking at like the non-technology mega caps right now, and I'm having a hard time seeing how we get gains over inflation without dividends in the next 10 years. If you're looking, at like the Johnson & Johnson's or, Siemens, or you're looking at 3M or something like that, I'm having a hard time seeing how we see gains in the next decade without dividends. And I think the average dividend of the S&P 500 right now is only like 1.45% annually, which is way low, considered or compared to like historical rates. Historically, those rates are over 3%.
Excellent point. So, the value, like that's why you need a value, as play as part of your portfolio, because particularly in low interest rates, you have the dividend play that you can use for income.
Yeah.
Right?
We've seen declining.
When bonds are paying next to nothing, you have stocks that are paying dividends, and you can get an income stream from that.
Right, but we've seen declining dividends now for since 1994. Essentially, we've seen declining dividends and declining bond yields.
Right.
So that 60-40 portfolio is not looking as great as it used to.
No.
Almost everyone I talk to now is more heavily weighted towards stocks and more heavily weighted towards growth and more heavily weighted towards technology. So I think for a lot of people that haven't been so you and I have been invested for a long time, right? I mean, I've been investing since I was a child. I'm used to volatility. I'm used to the gut wrenching look at my account one day and it's down 50%. Don't look at it again for 6 months and it's up 50%. Yeah, I'm used to that. But a lot of the folks who are on YouTube watching us are really new investors and have only experienced a good market.
Right.
We haven't really.
That's the danger. That's part of the danger.
That is part of the danger, right?
Yes.
So that is part of the danger. So Bob Johnson gave us a super sticker. You know what that is?
I'm afraid of
it. You don't have to be afraid of it. It's when people just watching the live stream actually give us a little bit of money here. Usually they ask us a question and I perform for them and then they give me a super sticker. But thank you, Bob. I appreciate you. All right. Thank you so much. So why are so many IFAs skeptical of crypto? Shoeless Joe says. So Shoeless Joe is from the UK. So instead of calling us, he means like institutional financial advisors or something like that. So why are so many IFAs or financial advisors skeptical of crypto? So I'm just going to say one thing before you do.
Okay.
So I am not skeptical of crypto. I'm in the financial industry. I've been licensed for years and years and years. I'm a certified financial planner, but I'm less enamored of crypto as an investment than I am as it is being a means of exchange, meaning using it to actually pay for things and the decentralization and financial freedom that's supposed to come with it, right? That's what I'm into, not as an investment. So I don't recommend it to clients as an investment ever because it's pure speculation at this point. Do I believe that it's going to become a store of value? I absolutely do. But would I recommend someone take the only $10,000 they have and throw it into Bitcoin? I'd have a hard time. In fact, I would never professionally make that recommendation, period. But I would have a hard time even advising someone to do that if I knew they had the money to lose. I'm very excited about it. I have quite a bit of money in it, but that's a personal decision that I've made. I'm willing to lose all of that, right? So talk to me a little bit about what your opinion is. I know you have a different opinion. You see more challenges for Bitcoin.
Oh, yeah. I am not necessarily an advocate of cryptocurrency, but I do think that electronic currency in some shape or form is here to stay, a lot of the technology. To answer the question that was posed, why do a lot of investment advisors or financial professionals, why are they down on or negative towards cryptocurrencies? There are a lot of reasons, but the basic reason is because of training. This is how we were trained in the education that we have. For example, I have a master's in financial analysis, right? And we're taught to analyze investments a certain way. One of the ways you analyze an investment is something called an intrinsic value. So there's a price that an investment trades at, or there's a value that the market is willing to pay for the investment, right? And then there's the actual worth as you boil everything down. Most stocks have intrinsic value because there's bricks and mortars, there are products that are offered. Houses and real estate have intrinsic value because there's land, there's an actual structure there. Cryptocurrencies don't have an intrinsic value.
So I'm going to challenge you here.
Some people would. I mean, the only intrinsic value that you might argue, and we can argue about this for days, is that the intrinsic value perhaps is the actual demand of the investor.
So I'm going to challenge you here.
So these are, whether that's right or wrong, I disagree with that. But whether it's right or wrong, these are some of the factors why, financial professionals, many financial professionals, have a problem with cryptocurrency. The other thing is that when we judge an investment, we also look at the track record.
Yeah.
I mean, Bitcoin, for example, has a 12-year track record.
Right.
Hey, you have to start somewhere, right? And I get that. But when you look at it and you look at the behavior patterns, believe it or not, investing is a science. Okay. All of these asset classes behave traditionally a certain way. And if you use that methodology, you can kind of predict the way things should be, and there's a basis for saying something is abnormal. You can't say that the trading of a cryptocurrency or Bitcoin is abnormal, except the entire trading is abnormal.
Because we don't have a law enough.
Going up 1,000%, right, because of the track record. There's a lack of track record. So these are some of the basics behind why financial professionals are down on cryptocurrencies and Bitcoin. The other main thing, too, is the very nature of a cryptocurrency. A cryptocurrency is a currency that floats by itself. It's not tied to any government backing. Now, that may sound fantastic, but to a lot of us, there's a problem there in that it may sound great. It may be the direction that we're heading in the future, but just know that that's an existential threat to governments. What government is going to say, you know what? We don't need the power of the purse. We've had that since the beginning of time. We don't need that anymore. We can just govern because we're nice guys. Or we don't need government. What government is going to say that we don't need government? What institution is going to say that we need to cease to exist? It's like a person committing suicide. So, even if Bitcoin and a lot of the other cryptocurrencies, which is to be, delineated from electronic currencies as a whole, but cryptocurrencies that float by themselves and are free, at the moment there's an issue. If there's a happy medium that can be made with a government or then I think that's the direction it's going to have to head into. In the meantime, you have a lot of you don't have oversight, and a lot of things are happening. Sometimes that's good to not have oversight. A lot of nefarious activities can and are happening, and it's not necessarily good.
So I wanted to destroy your argument here,
Okay.
but I don't actually want to spend a ton of time on that. Look, you keep saying there's an intrinsic value to stocks.
The sun comes up.
No, but you're saying there's an intrinsic value to stocks, but there's no intrinsic value to cryptocurrency. Look,
All
you're
right.
comparing cryptocurrency to the wrong thing. What's the intrinsic value of the American dollar? What is it based on?
Okay, and that's a fair question.
It's
That's
based
a fair
on
question.
faith. There's no backing to
The
it.
American dollar is based on, because again, we got rid of the gold standard, right?
Yep.
But the American dollar has an intrinsic value because it is, at the moment, the currency is the standard of the world. It just replaced the gold standard.
It's only the standard.
At the end of the day, gold only has value because humans want it to have value, right?
Okay, now you're getting somewhere.
Because
so why does the American dollar have value now?
Now,
why does the American dollar?
Bitcoin isn't there yet. Bitcoin isn't there yet. Could that happen? It could, yeah. But it's going to take some time for that for that to happen.
I think it's absolutely happening right now. And if you look at what just happened with,
it's not close to get to being
closer
there.
than you
happening,
think.
But it's not even.
It's closer than you think, especially with the futures market. Especially with the futures market taking off on Bitcoin right now. It's actually, in the next couple of years, the futures market is going to do a lot to reduce volatility. It's going to do a lot to reduce volatility. Now we even have financial instruments like Bitcoin futures ETFs. I think BITO. I just put like a real short 5-minute video on it today, but that is the first Bitcoin ETF or Bitcoin derivative ETF. I think period out there. It's the only one based on futures. But we're going to drop Bitcoin for just a second because I want to get to a couple of questions that people have. That's one of the things I like to do. Bob, who gave us the super sticker, he asked his first question. He said, "Hi, Jason, Loren, question. How would the great resignation in the midterm, say 2022 to 2025, play out? I'm of the opinion that corporations will eventually win out." I'm going to let you take that one, Loren.
went out as far as I need a little bit more clarity on that.
I think he means that the pendulum in terms of power is going to swing away from labor and back to corporations. Because right now, great resignation is happening because labor has so much leverage.
Yeah, it all depends on. I think I see corporations coming back into play. Unfortunately, or fortunately, I think I see a lot of that happening. If nothing else, all of the money that's being poured into the market. I mean, companies have access to capital like never before. I mean, more people own stocks than ever before, right?
Right. But we're talking about like 4 million people quit their
case.
jobs. We're talking about 4 million people quit their jobs in August because they can just go somewhere else for the higher paying job. That's what lots of them did. So I think the argument that corporations are going to win over time kind of ignores the fact that I think something like 48%, isn't it somewhere between 52 and 48% of people employed in the US at least are not employed by large corporations. They're employed by small companies with under 100 employees. Where you definitely have, I think you have it's the workers that have plenty of leverage right now. The pendulum swung a little bit too far in favor of employers, and now I think that now that employees have a little bit of leverage, they're walking away and just finding better jobs.
Yeah, but well, within the confines of 2022 and 2025, that it may still play out that way. But I think you've got a lot of issues with jobs, period.
Yeah.
With job availability, some jobs are going by the wayside. They're being replaced by automation or computers or whatever, inventions. Also, the jobs that are existing, a lot of people don't want because they pay too little. And then we have to raise, the minimum wage, and then that leads to a whole nother. So there are lots of jobs out there, right? That are attractive.
Well, look, the labor market as a market is working right now. If you own a restaurant and you pay your people $2.13 an hour plus tips to wait tables like you do in Texas and all through the South, and they go find a job making $14 an hour as a waiter plus tips, well, that's your fault for not offering more. Labor is a market, and in order to attract labor, you have to make the place that you operate an attractive place to work. Right now, workers just have more choices. Or in the case of a lot of double income families with children, they don't have choices right now because people aren't coming back into childcare. That's one of that was one of the things in the employment report that I read put out by the Department of Labor is that up to 1 million people that aren't in the workforce right now, that's because they just can't find childcare. And that's because childcare providers don't pay their workers enough as well.
The other thing too, though, what if employers the big corporations and the like start coming up with a way to step in and fill that void?
But that would be great, right?
But then the power then shifts back into
power shifts back, yeah.
And I think you're going to see that because that's one of the ways to get people back in the office, right? All these companies are mandating that people come back. And it's
isn't that good for all of us though, Loren? Especially people like you and me. Like our customer base is really narrow. It's people that make good incomes and have wealth. So it's really, I remember when I worked for a regional bank here, we estimated that we could work with about 4% of the population of the bank, and the rest of them didn't have enough money, right? I want to see that base widened out. I want everyone to make more money. I want everyone to be for it to be possible for them to be my clients or to be your clients, right? So I think that this great resignation is going to resound for the next couple of years. And we're going to see, like you said, we're going to see better and better benefits being offered by employers to employees, which maybe that's better medical, maybe that's childcare, maybe that's longer vacations, and it should be higher pay. Like we've just seen too much wealth funneled to the top and not enough to what we call the consumer class, like the people who actually drive the economy, right?
Well, the destruction of the middle class has been happening for so long. I mean, I would like to see a reversal of that.
Me too. Yeah, and it's everyone seems to think this is like a zero-sum game because someone else is earning more money. Does it mean that I'm earning less? No, that's not what it means, man. Not everything's a slice of a pie where you get less.
Not everything's a limited pie.
That's right. Not everything is. So.
Even when there's a limit, if you have to limit it, everything is limited, but maybe a limited growing pie.
Right.
Change your size. I mean.
All right, so we're going to move on to the next question here, and this is one that you may or may not be familiar with. Mark T says, what is the worst thing that can happen to Q yield? Do you know what that is?
No.
So that's a covered call ETF. This is one of the things I've never talked about this on my channel, but I do own like 100 shares of this. And I own a lot of things as kind of a placeholder, just so it stays on my radar and I pay attention to it.
Right.
I mean, occasionally some of those things just really suck. This is not one of those things, but you have to understand what this is. This is a covered call fund. So What is the worst thing that can happen to this? The worst thing that can happen to a covered call fund is the cost of the covered calls while the market is going crazy up. It means that you don't keep up with the NASDAQ. So it's the covered calls on the NASDAQ 100. The NASDAQ goes through the roof and earns 30% in a year. The cost of calls is going to drag your performance down. You're not going to make that. Like, you'll probably make 10 or 12%, right? Because you'll make some income off of selling the calls, but then you have to repurchase, the shares of the index every time your calls are exercised. So that's kind of the worst thing that can happen. You do have some downside protection in there as well, because I assume that on the other side of that transaction, they're actually buying some puts too. So I don't actually assume that. I don't know that that's true, but that is kind of the worst thing that could happen, is you get left in the dust because that fund is very, very expensive. So another company that I work for used to have a global fund where they did this, where this fund did really, really well in the downturn of 2008. And then from about 2010 on, the performance just dragged behind the general market. And I can't remember the name of the fund now, but basically the company ended up discontinuing it because the public couldn't understand the idea that in the long term, during good times, you're probably going to underperform the market, and during bad times, you're probably going to outperform. So, yeah. Let me see here. Epic. Let me see. White Wolf here. I didn't read this question before I posted it. What's the ability to disintermediate banking and the cost of banking and the time of waiting throttle? What about its ability to disintermediate banking, the cost of banking, and the time to wait for settlement from a direct deposit? He's talking about cryptocurrencies, right?
I think it's fantastic.
So the problem with that is we don't have a ton of real world examples where that's done in a timely manner right now. And a lot of that has to do with transaction throughput. And a lot of it has to do with, we don't see a wide adoption of smart contracts and things like that as well. So I probably one of the few businesses around, at least where I live, that actually accepts cryptocurrency to pay for merchandise. And the reason I do that is because of how the IRS has recently defined cryptocurrency. Is it's not a currency.
I wonder why.
So if I accept cryptocurrency as payment for merchandise, how do I pay taxes on it? Right? Is it just an exchange for value? Did I lose money on that transaction if it declines in value? Right? So since in this one business where I accept it, I don't move a ton of actual merchandise. It's a service-based business. I don't let people pay for the service in cryptocurrency. I just let them pay for like t-shirts and clothing and things like that. So in that way, I kind of, because I'm exchanging one commodity for another, who do I pay sales tax to? There's no definition for that, right? So we don't have a way of defining that right now. Like I'm taking the chance and I'm going to sit down with a CPA at the end of the year and figure out how much I pay in taxes. But the way the IRS has defined this has made it to where I'm probably doing more transactions with cryptocurrency, like actual transactions, than most people around. And I can tell you that getting things done in a timely manner is terrible. Like sometimes it takes 10 minutes to clear a transaction.
But that's just now, though. I mean, the concept is one of the keepers. I think that technology and being able to do that is, right. I think, something that's going to remain. You just have to improve it. But it would be a lot better to do it if it was on a different platform. If it wasn't on the platform of a cryptocurrency. So
and the problem is right now,
which is making it difficult to do. Yeah. The technology is there, but the buy-in is not.
The buy-in is coming though, and it's not necessarily with Bitcoin. You look at networks like Algorand that are seeing adoption outside of the United States, seeing pretty heavy adoption. You look at Ethereum, and particularly looking at Solana with the profusion of NFTs on Solana's network. I think Solana is making a good case right now with the number of NFTs that are being bought and sold on their platform. I think they're making a really good case right now to be the network that comes in third behind Ethereum and not Cardano. Cardano has like a really large number of maximalists that aren't really looking at things in a rational manner. So I can't predict who's going to be the winners in cryptocurrency, and that's why I would encourage, if you do hold cryptocurrency, have a variety of cryptocurrencies to increase your chances that one of them, most of them are actually going to fail. I think that, Loren, you and I had this discussion. Out of there's 161 national currencies, several thousand cryptocurrencies. Most of those are going to fail. I mean, heck, there's a lot of national currencies that fail on a regular basis.
It just reminds me of the .com, bubble when, people thought this was a new paradigm, the internet, and it was, but a lot of the companies, most of the companies don't exist.
Yep.
So if you're, you have to invest in that idea and the technology, but not necessarily the company, because the company may not be around.
So Bob Johnson has a question that we absolutely cannot answer on YouTube. Right? This is an example of this, Bob. So, Bob, in order so literally because of financial regulations put out by our watchdog agencies here, we can't answer this question unless you've personally, unless you've signed a financial planning agreement with us, unless we know your age, your objectives, your tax bracket, your net worth, all of these things. So the idea that somebody can do this on YouTube when they do this, one of these days they're going to have FINRA or the SEC coming after them and saying you are giving out financial advice without being a financial advisor. That's going to happen at some point. And I realize there's a lot of YouTubers that do this, and this is an unregulated space right now. But Bob, if you really want to answer to that question, have a talk with Loren. His contact details are in the description.
The key thing on that question though was, would you recommend? That word alone?
Yeah, that's the problem.
A big no-no.
Let me put it to you this way, Bob. I am 100% stocks. I've been 100% stocks basically my entire life. The only thing I occasionally hold is junk bonds. I don't know why I like junk bonds so much, but I really do. I really like junk bonds, and I have some alternative assets. So, but generally, I'm 100% stocks. My stock allocation has actually gotten more aggressive over time, not less aggressive over time, as I've become more and more comfortable with taking risk. I was actually far more conservative as an 18-year-old investor than I am now as an almost 50-year-old investor. Partially because I'm not just investing for my time horizon now, I'm investing for my kids and all that stuff. So I want them to have sort of the jump start in life that I didn't have. But so we're happy to take those questions offline, Bob. But they need to be answered in a professional situation. White Wolf, what about smart contracts and the ability to provide absolute proofs? Think about the amount of contracts you're in. The risk is reduced. The risks are reduced by smart contracts and superior. The risks that are reduced by smart. You know what, White Wolf? I don't think I can answer that one intelligently on this. That's a really good question, and I don't think I can answer that intelligently on a live stream. Let me think about that and get back to you. Okay. Patrick Dillon says, which IRA is better, a Roth or a traditional? This is another great question.
Great question. Again, it's another one that kind of depends on your personal situation, but as a rule of thumb, Roths tend to be better for younger people. Mm-hmm. Traditional IRAs tend to be better for older people who are making more income. Here's why. Usually throughout life, as you move through your professional or your work career, your work life, while you're earning money, when you first start making money as a younger person, you tend to earn a lot less, except for athletes, of course. You tend to earn a lot less in the beginning than just before you retire. Okay, so first of all, there are income limits to investing in a Roth. So you may be limited at some point in your working career if your income goes too high. The other thing is, remember, a Roth is tax-free, and a traditional IRA is tax-deferred. So what do I mean by tax-free? It means you are contributing after tax money that's already been taxed into a Roth, and that money can grow forever. You can even pass it on to beneficiaries without having to liquidate it. And when you pull the money out, it is tax-free.
And growth included is all tax-free.
Oh yeah. So the traditional IRA is just the opposite. You are contributing for the most part. One of the benefits is that you get to contribute with money that has not been taxed, and when you pull it out, you get taxed on it.
Yeah.
So many times, these are retirement vehicles. So as a rule of thumb, when you pull the money out, you are above 59 and a half, you're close to retiring, and when you do retire, your income is not that great. So even though you have to pay taxes on it, it would, in theory, be a lot lower than if you were still working.
This is kind of a rule of thumb that I had when I worked with a lot of military folks. Their spending and investing habits were pretty much set by age 30, and they weren't really going to change, right? Even though they were going to earn more money every single year, right? Because they're going to get the cost of living raises, they're going to get promotions, and they're going to retire, they're going to have a pension, plus they're going to have a civilian job. And I always said, if you think about age 30, did you have $100,000 saved up by age 30? And they're like, no, right? So if they didn't have, a lot of them do. Like a lot of the military folks that I work with, enlisted or officers, they had over $100,000 saved up by age 30, and a lot of them didn't.
Especially those based off in places where you really couldn't spend it.
Yeah, but I told them, if you didn't have $100,000 saved up by age 30, go ahead and put it in the Roth. And they're like, why? Because you will not be in a different tax bracket when you retire. You're going to be in the same one. Right. So deferring, and this is back when we had the 25% tax bracket. 25% tax bracket is a huge tax bracket. It doesn't exist now. It's like the 22%, but it covers incomes from roughly like $70,000 a year up to about $160,000 a year for a married couple. The likelihood that if you are an investor and you have $100,000 by the time you're 30, you will almost certainly end up in that tax bracket when you retire, because you're going to have just enough income coming from Social Security and other deferred accounts like a 401k that you're going to be in that 25% tax bracket. So why would you defer 25% now to pay 25% on a much larger, or on the same amount of income later on in retirement, but a much larger percent of it's going to be tax-deferred income coming out of your IRA? So why wouldn't you pay taxes on it now? You're still going to be in the 25% tax bracket based on what you've already accumulated. Pay taxes on it now, take it out tax-free in retirement. So that is one of the, and it's not a hard and fast rule, but a lot of people don't realize that you simply will not be in a different tax bracket when you retire, because that 22 or 25% tax bracket is so freaking huge. It covers so many people, right? So, oh wow, geez. So Doug B, he's all the way down at the bottom. Doug B says, hi, Jason, I can't stay, but wanted to pop in and donate. Appreciate your coverage, Expon and Sofi. Thanks so much. Doug B, thank you. Doug B is a member of my Patreon group too, and contributes $5 a month to that. He has no reason for him to contribute to this live stream, but thank you so much. I really, really appreciate that. Yeah, so which is better, a Roth or traditional? I think you really need to sit down. This is a question where you definitely need to sit down with a financial advisor and consider that, or read up everything that you possibly can with your financial advisor. Also, be realistic about how much your income is going to grow in the future and where you're going to end up in terms of, like, I fully fund my Roth IRA every year, regardless of my income. Use the backdoor Roth IRA when my income is over that. Just directly contribute it to it when my income is under it. But anyway, what I think is sit down with a financial advisor, or do all the research that you can to determine. That's an extremely, extremely personal question.
Yeah.
Yeah.
As a rule of thumb, though, we covered the rule of thumb, but does that cover your situation?
Right.
You need to examine that.
Okay, so people are really on cryptocurrency right now. So in the comments. So it's like El Salvador made Bitcoin legal. Ukraine and other countries are making Bitcoin legal. And then Bob Johnson says corrupt countries make Bitcoin legal because it secures value for their questionable activities on both sides of the law. This is
right, and they have nothing else to lose either. I mean,
I said that the
currencies are in trouble.
Absolutely.
So
look,
They had nothing to lose.
Ukraine and El Salvador and these other countries didn't make Bitcoin legal. They made it legal tender, which is very different than simply, it's not illegal in most countries because it's not even defined as an asset or a cryptocurrency, but they made it an actual currency in their country, which is very different than saying it's legal or illegal. They made it legal tender. But Loren, you and I had this conversation that I firmly believe that cryptocurrency has become a store of value because of crime. Mostly because of cybercrime and like cyber hostage situations, like encryption attacks and that sort of thing. So we know, you and I both know a number of companies that have been attacked, and they were told to pay in Bitcoin to wallets. Those wallets were taken offline. Sometimes the money was never recovered. But this is how many things gain acceptance over time. A store of value is created outside of the traditional financial networks. Now, I talked about this on, I don't remember, maybe I talked about this on another live cast, but I used to do financial investigations, and we did a lot of work on something called the Hawala system, which is a system of transferring value across country lines, across cultures, without using without any consideration of the traditional banking system and without any consideration of like national currencies or anything like that. It's like, say, somebody in Somalia who has relatives here in San Diego will say, my uncle just gave me, or your cousin just gave me $10,000 in Somalia. You give my uncle in San Diego $9,500, $500 as commission. It's called the Hawala system. I think it literally just means like value in Arabic. But it's a system that's been around at least since the 1100s and operates apart from the monetary policy of any country. So this is not dissimilar from Bitcoin. And I think that the same thing is going to happen. The Hawala system is only considered illegal and underground in Western countries. It's completely accepted in Central Asia and the Middle East. And I think that Bitcoin is going to be the Western world's version, or the global version of the Hawala system is what I think. So. Yeah.
Okay. I wanted to know if I could ask you a question, and maybe some of the people can help you on this.
Okay.
Like a curveball.
Go ahead.
All right. So one of the things that is attractive, and correct me if I'm wrong, is that with cryptocurrencies, they're a free-floating currency. They're not beholden to any government. Mm-hmm. They're owned by the people, right? Mm. With the price of Bitcoin and all that. Usually, it's he who owns the gold makes the rules.
Right.
So let's just say we decided to make Bitcoin to strike down all the other currencies in the world and just use Bitcoin. Who controls Bitcoin currency? Don't the people who own it? So the biggest owners of cryptocurrency, of Bitcoin, the largest owners of Bitcoin, wouldn't they control like the world?
The way that
to the whole concept of a cryptocurrency?
So you're only getting part of it. So currently, as it stands right now, the people with the most power in Bitcoin are the miners, right? They have vested interests. Right. They have vested interests.
Right.
But and this is one of the big questions when it comes to cryptocurrency, is solving that trilemma of decentralization, security, and scalability. Most cryptocurrencies are able to solve two of those really easily, but the big one is security and decentralization. How do you get both of those? So Algorand is one of those where they're using proof of stake to do things rather than proof of work. So you don't have to have millions of dollars invested in mining equipment to have a say, right? You join what's called their governance program, and you get to you have to vote on their actions. But everything is done by consensus. Everything on the blockchain is done by consensus as well. So it's very difficult for one small group of people that hold a lot of Algorand to control the entire network. The same thing is going to be true with Ethereum when they upgrade to Ethereum 2.0. It's sort of true now. Even the founder doesn't have that much power in the group. He's just very influential. But the stakeholders in Ethereum all vote on action, in all these cryptocurrencies, vote on their actions. Cardano is this way, Solana is this way, Algorand is this way. Bitcoin has great.
Become a stakeholder though.
You can actually go to Algorand's website and say, I've got this much in Algorand, sign up for their governance program. They have different governance periods every 90 days.
So you have to have at least a minimum. You have to have a minimum to have some governance.
Yeah, minimum right now I think is like 10. I think it's 10 Algorand. It might even be less than that, but that's like $20 an Algorand, and you get to vote. So
are the votes weighted? I mean, in other words, if you have more,
if you have more, they are.
I mean, is the vote weighted?
They have more. They are weighted. The idea is to have a distributed system. The problem with
that's problematic as well.
No, it's less problematic than it is with Bitcoin. Bitcoin is a proof of work network where you need to own all of this expensive equipment and burn all of this expensive energy in order to mine Bitcoin. A proof of stake network is very, very different. It's number one, it's carbon negative in a lot of cases. But number two, it prevents a lot of this concentration because anyone can become a stakeholder now. Anyone with any, it's basically, it's going to be a better version of corporate shareholding than we ever had. I think, meaning that you're gonna be able to. It's going to be very, very difficult for any small group of very large stakeholders to take over the network, and there are methods in place to keep anyone from preventing a majority of everything in Algorand. So we see here, yeah, and so for some reason I'm getting the. So answering Loren's question, Bitcoin and Ethereum are the most decentralized. Solana are the most centralized. Solana is the most decentralized by the Nakamoto coefficient. So algo only need one algo. Okay, White Wolf says only one algo is needed. So you need one coin to be a stakeholder for Algorand, which is very different. So let me see here. Let me move on to some more questions. We've had such an interesting discussion. Normally I try and answer every single question, but we're talking so much that we're not able to do that. So let me see here. And, oh, here we go. What about the great early retirement for those who are fed up with government mandates? How does that affect the labor shortage? So that is that's a very valid point. We know, in fact, this is something that Loren, you and I, and Amar have discussed. We know a lot of people that just gave up on working in 2020. They're like, I wanted to work for another 4 or 5 years, but 2020 just made me think I don't want to go through the hassle of going back to the office. I'm just going to stretch out unemployment as long as I can, and then not go back to work. I think a lot of people did this. Right now, they're still being counted as people that are long-term unemployed, when the reality is they're never going back to work. But I looked at the employment report 2 weeks ago, and when I made my video on the Great Resignation. The difference in workplace or workforce participation between February 2020 and today is only 2.5 million people. There are only 2.5 million fewer people in the workforce today than there were in February 2020. And 1 million of those, according to this report that I read, are likely women who could not find childcare. Right? So 1.5 million of those are either people that just don't want to work and can retire, or people who can't find work, or people who don't want to work, period. But those pandemic benefits ended 8 or 7 weeks ago. If you were riding those out to the bitter end, now you've got to go find work. But the idea that there's some like government mandates creating everything, or government benefits that were creating all of this unemployment, that thesis has been conclusively proven untrue. And it's the states that ended early didn't see a bump up in employment. That ended pandemic benefits didn't see a bump up in employment. There's a lot more going on in the employment market than simply saying it's all caused by the government. I think it's a lot deeper than that. I think the pendulum swung to workers in terms of power. I think that like a lot of people realize, I don't want to work a minimum wage job. They went out and proved themselves. They made themselves more essential wherever they were working. And now they can just demand more, and they have more choices because there's so much pent-up demand. But anyway, that's my opinion, Marie. Feel free to disagree with that. I don't know, Loren, what do you think?
Well, I don't know. I think it could. Yeah, there's only a small difference, but I think that those numbers may increase. I mean, not only do you have people who are not willing to get back into the workforce because of the mandates of getting a vaccine and all that, but you have some people who are saying, you know what, I'm close to retirement anyway. Yeah. Or I have enough saved up. I'm just going to retire earlier than I was. Yeah. And we'll make it work. Will that number really swell? I don't think so, but I think it could get larger than what it is now.
Yeah, no, and I agree that it could get a little bit larger than the number is now, but you and I have just seen so many people in that one situation where like, well, I've already got $2 million saved up. I'm just not going back to work.
Right.
You know, and I think the pandemic was just a trigger for that. People just found out they enjoyed not working and they can afford not to.
Right.
And I think there were a lot of baby boomers in particular that were just working because they didn't know what else to do. And during the pandemic, they found something else to do. Let me see here. Shoeless Joe says, Jason, I know you're a bit bearish on EV tolls. I've seen some estimates that the market could be worth well over 500 billion. Lilium and Joby sound interesting to me. Isn't it time for a second look? It could be time for a second look for that. I'm a little bit more positive on EVs being a part, like a vertical takeoff and landing vehicles for like drone delivery. I will literally shoot my neighbor's vertical takeoff and landing vehicle out of the sky if he tries to land it next to my house. Have you heard how much air these things push? Right? It is extremely loud, and I like my car. Like I will do everything I can to ruin that thing, right? So I think there's, at least in the United States and in Europe, because of our privacy issues here, we would have a real hard time getting that approved in many, many locations. It would cause a lot of like problems in society to do that. I do see for drones though, like delivery by drone, I think that is coming. I think that's something I would like to fight, but I'm not gonna go tilting windmills here. I think that I'm gonna take a look at some of those things. You're right, Joe. I think that's a good idea. So let me see here. Isaiah Castillo says, "What's on your Patreon?" On my Patreon, really, I don't do a ton of things on my Patreon that I'm not doing here, but we do have some really great discussions. I think the best thing about my Patreon is the number of really smart people in that group who are sharing really good ideas on the Discord chat, and I think that is the most impressive thing about them. I learn just as much from them, probably more than they're learning from me, and I think it's a good meeting place and a good way to bounce investment ideas off each other. So. Let me see here. All right. So Bob Johnson, Bitcoin is the only truly accepted store of value in crypto space. So its value in total circulation is forever capped. Its value determination will eventually trend differently. Well, so the value determination, depending on how long your time horizon is actually only trending in one direction, and that's up. Right. So if you look at it 12 years, it's only gone up in 12 years. If you look at any 6-month space, you could be disappointed, right? But people like Loren and I, we don't look at things short term. Like when Bitcoin, and I think it was it 2017, dropped from 18,000 down to like 4,000. Yeah, I was disappointed, but I didn't sell any of my Bitcoin because the trend line up until that point had only been up when you looked at a long enough horizon. I still think that that's true today, that because of the capped value. I know that Jamie Dimon, the CEO of Bank of America, he's saying that it's a limited supply of, right? He's saying that Bitcoin's a limited supply of nothing. Well, I got news for you. That's how most national currencies are too. They're a limited supply of nothing, right? They're backed by nothing. They're not backed by gold. And I guess the only argument you could make that the American dollar is only backed by the claims paying ability of the U.S. government, meaning that if you buy a U.S. bond, you're going to get paid back in U.S. currency. Right. It might be wildly deflated by the time you get paid, or inflated by the time you get paid back, but you're going to get paid back.
That's why it's the currency. It's lingua franca. I mean, a lot of currencies is backed by the U.S. dollar.
It's still backed by faith, though. That's it. And that's the only thing it's backed by is faith, which is the same thing that cryptocurrency is backed by.
So the cryptocurrency has the same faith and value as the United States government.
It will eventually.
It's possible, but you or I won't probably be alive with that if and when that should happen.
Well, I think it's going to happen. I think it's absolutely going to happen. So let me see here. Nicholas Moran says, what is your opinion on gold? Should we buy it? Okay, once again, we can't recommend to buy, sell, or hold any security on a YouTube channel. But what is my opinion on gold? Man, my opinion on gold is very, very complex. So I'm one of these people that, just like with national currency, just like with gold, just like I don't see a value in something just because everyone else sees a value in it, right? What can you do with gold? You can't make tools out of it. It's too soft. It's a great conductor of electricity. That's really good. It's very pretty and very shiny. It doesn't produce an income. Nobody will rent it from me and pay me an income on it. It doesn't pay dividends or anything like that. But it has a persistent value over time. Even though it can get higher or it can get lower, it has a persistent value over time. I think it's a great hedge. But what is it a hedge for? That's the thing. It's not really a hedge against inflation.
It's really people use it as a hedge. I'll do one better. People use it as a hedge against fear. Okay,
that's true. Yeah.
So the point is that when people have less faith in the dollar or the currencies that are in their particular country, and they think that things are going to go to hell in a handbasket, excuse my French, gold is what people go to because that's a safety area. Gold is considered safe. So as a rule of thumb, investors like gold when times are predicted to be not so rosy in the next few years. People flock to gold. When times are good, people tend not to flock to gold. They're in stocks or other investments.
Right.
So.
Yeah, and people always look at gold as this like permanent store of value. There's actually one example from history, and I just can't remember exactly when this was. I want to say it was like in the 1100s, and it was in North Africa. There was a person from Western, maybe later, like 1300s. There's a person from Western Africa who converted to Islam, decided he was going to make the Hajj, which is the pilgrimage to Mecca.
Mansa Musa, I think his name is. Yeah.
That's who he was, yeah. So he goes to North Africa. He brings so much friggin' gold with him that it crashes the price of gold for like 3 decades in North Africa.
Right.
And that's when they started trading more silver than gold because there was so much. It was so abundant in that time period, which to me, I find that absolutely fascinating that happened. Everyone keeps telling you that this always has value. It never happens. Always using absolutes. But I'm actually surprised. I shouldn't be surprised you knew that story. That's a great story.
Yeah, and you know what? And to further that, it lost value again when because a lot of gold was in West Africa during that time.
Yep.
When Columbus came to the New World and there was gold and he was able to send back.
Yep.
To Europe, that was another devaluation of gold because the value of gold is finite until you find another batch of gold, and then if there's more gold, the value lessens. Right?
Speaking of elements, let's talk about lithium for a minute. Look, I made a video on lithium that absolutely bombed. Nobody liked it, but it was basically. A lot of folks are asking me right now, like, how should I invest in EVs? Maybe it's better to invest in like the picks and shovels of the EV gold rush. Like people invest in the gold rush. People who sold picks and shovels in the gold rush or blue jeans, like Levi Strauss, did a lot better than the actual miners did. A lot better. Like Levi Strauss made more money off of the gold rush than any miner did, right? So it makes a lot of sense that the lithium-ion battery supply chain might be a better place to invest than any individual car company outside of Tesla, right? So nobody except Tesla is doing exactly what Tesla is doing, and most companies aren't even coming close to what Tesla is doing, right? So the video I made just really was comparing 2 different ETFs, and one of the points that I tried to make, which I think was completely missed by the people who watched the video, is that Albemarle Corporation, not only do they have a lot of interests in mining, but they manufacture a lot of the precursor chemicals that are going to be used in lithium-ion batteries. So lithium's not a rare substance. It's not rare at all. It's like the 26th or 28th most abundant element on the planet. It's extremely abundant in seawater. We have deposits all over the world that aren't exploited. So the real investment challenge here is going to be how fast can we exploit these lithium deposits? Not can we find them? It's how fast can we exploit them, right? That's kind of the big thing. But so have you looked into this at all, like investing in the lithium miners or chemical makers or anything like that?
No. I mean, I'm more in the category, the camp, of what you mentioned before. and that's investing kind of around the industry as opposed to being a little bit more granular with lithium specific.
Yeah. So I think there's something to be said for that too. Like Elon Musk himself has made the point that out of all of the manufacturers of vehicles in the United States, there's over 1,600 of them in the last 100 years or so. Exactly 2 of them have not gone bankrupt, and that's Ford and Tesla. So investing in a car company actually seems like a bad idea, right? Since most of them, but investing in sort of like in what every car in the future is going to need probably makes a lot of sense. So I hold some of LIT, which is an ETF, which is lithium and battery technology ETF. And the largest holding in that fund was Albemarle, but they do hold like a lot of lithium miners and things like that. Loren, maybe that's something you should look into if you're looking at. You are definitely not as excited about like the electrification of transportation as I am.
I don't know about that. I'm very excited about it. Oh yeah. I mean,
I'd like to see things.
Honestly, this is where we're going. I mean,
yeah. Somebody asked earlier, what is the reason? And I can't find it now. I think it was Nicholas asked, why did Tesla move their headquarters to Texas? So,
one word: money.
Right? No, I disagree with that. I disagree with that. So, part of the reason people think is that Tesla's going to escape all the corporate taxes that California puts on. That they're not. Even if you move your headquarters from from California to Texas, California is still going to collect their taxes for the next 10 years on that corporation. Not only that, Tesla doesn't have an interest in pissing off California too much. They gave Tesla about $2.9 billion in tax breaks, incentives, and outright grants and loans to Tesla to get them off the ground. And so I don't think he wants to create any bad blood there. But look, what is Tesla's goal? What are they trying to do? They're trying to take us off of a carbon economy. Where is the carbon economy centered in the United States? It's centered in Texas. That's where you have a huge concentration of oil wealth there. You have a huge concentration of refiners there. You have some of the most lax environmental laws in the entire United States. They can pretty much do whatever they want to do. Labor's a little bit cheaper there. But where they're moving into, they're moving their company into Austin. Austin it's cheaper than the Bay Area in terms of land, in terms of salaries, in terms of like labor expenses. But it's not cheaper than say like Southern California, like San Diego. It's just as expensive as there. Corporate taxes, they're not even going to see that benefit. Not paying California income taxes, they're not even going to see that benefit for the next 10 years, at least at the corporate level. And then Elon Musk himself, he doesn't get paid a salary, right? Or he gets paid very little salary. His compensation is almost all in stock. So it's not personally about money for him, but also they need to be closer to where they're going to be distributing the most amount of vehicles. And what is the vehicle that's coming next? That's going to be the Cybertruck. So trucks are one of the largest, they're one of the most frequently, and I'm sorry, one of the most purchased vehicles in the United States is trucks, like the Ford F-150. Full-size pickup trucks are huge business. You want to be close to where most of those trucks are being sold. It's not in California. Plenty of them are sold here, but this is not the center of where that is. They want to be distributing as close as they can be to that large section of the market. They are going out there to challenge Ford, man. And they're going out there to destroy the oil industry in a lot of ways. But they're going to do it by offering people who are in the oil industry now alternative work, right? Go to work in a Tesla factory, bring whatever skills you have and translate them into this new technology, this new job, this new industry. It's not a revenge thing. It's not motivated by politics so much. I think it's motivated by business, but in the framework of the overall goal of taking us off of a carbon economy.
I hear what you're saying, but the thing about it is they can do all of that without relocating their headquarters. Okay?
They could, yeah, they could.
So I mean, relocating their headquarters is another. It's a big step.
Yeah,
and it's also symbolic in many ways, right?
Yeah. Yeah.
So
it's just weird that they're moving it to a place that's so expensive like Austin now. That's one of the things. Bob Johnson asks one more question here. Last question for me. Can you look into Boxable? They're a privately held modular housing startup looking to bring housing into the 21st century with manufacturing tech like Tesla. Yeah, I love to find companies before they go public start looking at them. Like with SoFi, I found out about SoFi before they went public. Started paying attention to the way they were doing business, and I was just chomping at the bit for them to go public. And look, I took a big bet on SoFi, like a really big one, and it's now paying off. I was underwater from April or May until a couple of weeks ago, right? Pretty far underwater on that. But my conviction was related to my experience working in the banking industry. They're doing everything. SoFi was doing everything they needed to do in order to create those sticky relationships. I'll look at Boxable, modular housing.
I think it's part of the future.
I think it's part of the future, but it's had issues for so long. So let me see here. Any thoughts on virtual or augmented reality? Hey, did you see my video that I did a few months ago on the Metaverse? So Isaiah, I did a video a few months ago. It was called Invest in the Metaverse. You should probably take a look at that. Very much into augmented reality and virtual reality. I think there's commercial benefits. I mean, there's applications in the commercial world, meaning we'll be doing training more in augmented reality. But here's the other thing that people aren't talking about right now. Nobody except Kathy Wood is talking about Roblox. You know who Roblox is, Loren?
Roblox?
Roblox. You don't have kids. So
Roblox.
Roblox, yeah. So it's like video games for kids. So
right.
And so that platform is set to pay out $500 million this year, or on pace to pay out $500 million this year to developers, software developers. So they have quickly become a major labor platform, not just a third place to go. Like we have work, we have home, and now the metaverse is a third place to go. But it's becoming work, home, your third place to go, and your labor platform at this point. There's something happening there with the metaverse that you and I, as advisors, need to pay attention to.
Oh, I'm paying attention to it, and the good news is that there are companies that you may already be invested in that are some of the leaders at the moment in AR technology, and there are companies that you may not even think are involved in it, like Etsy. Etsy is one of the leaders of AR technology.
Yeah, they have that app on the phone where you can visualize putting where the furniture.
You're just going to develop that. It's going to get more and more realistic, and they're going to develop that.
Yeah.
So you're looking at the very, very beginnings.
Very beginning of that. Yeah. And have you ever seen that movie Ready or seen Ready Player One? Have you seen that?
No, but I've heard of it. Yeah.
It's actually well, I don't think the film was that great, but the concepts in it were like mind blowing to me as far as that's when I really started thinking about the metaverse and what all of the commercial possibilities were for it and how it's going to be monetized. And now with NFTs becoming more and more prominent in our economy, that is how the metaverse is going to be monetized. I think this is going to be, So Nicholas Morin says, Loren looks like an expert invited in CNBC to talk. He is an expert. Loren is an expert. Like you're looking at what is your degree in financial planning back there on your wall?
Oh, I guess I had to have something, right?
Yeah. Let's see here. Another question from Nicholas. Can we go back to buying Chinese stocks, NEO, Baba, Xpub? Is the Chinese crackdown ended? So look, investing in China, I've been investing in China for a very, very long time. I've had a couple of successes and a couple of spectacular failures. But one of the things I can say about investing in China is that, once again, you have to take that longer view like you do with Bitcoin. If you look at Bitcoin over a long enough time horizon, it's only going up, right? If you look at that chart over 12-year basis, all you see is, I can't do this on the camera, it's going the opposite way. All you see is it rising over time, right? If you look at it in the 6-month period, you could be down for 6 months at a time. The Chinese stock market is the same way. You go through these long mini bear markets, like 9 months, 12 months, where everything gets beaten down. And it usually has something to do with the federal government trying to figure out what new regulations they want to have, right? And they smack down people they shouldn't smack down sometimes, and they kind of suppress innovation for a little while, and then they kind of take their foot off of the necks of these companies for a while and let them breathe again, right? So we're just going through that again. This is business as usual as far as investing in China. Am I disappointed that NEO hasn't gone straight up? Yeah, I'm pretty disappointed. But am I selling Neo or Xpeng or anything like that? No. But I'm not purchasing Alibaba right now, but I am purchasing Baidu. Baidu has a lot of things going on in the AR VR space, as well as artificial intelligence that I'm very much into. Anyway, those are my thoughts. I don't know, Loren, if you are invested in any individual Chinese stocks, or if you avoid them like the plague, like a lot of financial advisors do.
No, I don't avoid them like the plague, but I am, mindful of a few things. And it's, one of the things is the current president and how he's doing things, and just how much control, whether it's about him having more control, central control over the economy,
right,
or whether they're really trying to get the economy in shape. And, and I'm saying that with what's happening with them regulating different industries, like, with the real estate industry. And we've seen what's happening with that. It's one of the biggest threats right now.
Yes.
A lot of it has been government imposed.
So that is, hold on. At Loren, most important question of the day, coffee or tea? Is that okay?
This happens to be tea.
Happens to be tea. All right. And then another question. Loren, how would you advise someone who is behind on their retirement investments to structure their portfolio? So he's over in the UK, so we can answer this question.
Yeah. No, I mean it's again it depends. It's a personal question. So I mean, if your appetite for risk is pretty great, then of course you want to be more aggressive to try and make up some lost ground. If it's not that great, then you want to invest as aggressively as you can while you're, to make up for lost time, and because at some point you will be retiring and you won't be in that income gathering stage. You'll be in the income spending stage, and you want to have more instead of less. So, and the general answer to that question is to invest more aggressively, but I can't. It's very difficult to answer that question without knowing your situation.
Right. One of the other things. I'm saying that was great, Loren. One of the other things to keep in mind, Dave Ramsey, I was watching his show not too long ago, and look, a lot of financial advisors have issues with Dave Ramsey, and I do, trust me. But one of the things that he did mention is he does a lot of research on his own clients, and the research that they did on their own clients determined that the number one factor in what folks had at the end in retirement was not actually investment experience, meaning what their rate of return was. The number one determining factor on that final amount was actually how much they put away, right? And it just goes to show that there wasn't that much of a difference in investor experience because of human behavior between very aggressive investing and moderately aggressive investing. There wasn't that much difference in return. The difference was how much you put away. Why is there not that much difference in return between an aggressive investor and a moderate investor? Mostly it has to do with human behavior. Most people who say they're aggressive investors aren't that aggressive. They're gonna sell when they're down and try to reposition and make more money. They're not gonna buy and hold. They're gonna end up underperforming their benchmark because of the human factor. You simply will be wrong when you try to predict the future too much. And that is like, if Dave Ramsey was willing to say that on TV, or maybe he's a smart guy, so I assume he understood what he was saying, that the most important factor in how much money you have in retirement is how much you put away, not how you invest. So, and it's time, and it's also time too. Like the longer you have,
time in the market,
and how much you put away. So, Shoeless Joe, my advice to you is if you are really that, I don't know how old you are, but if you're older, put money away until it hurts. If you're my age, you still have time, man. You're not that old. So,
but still put money away until it hurts. So, but that's the answer that every financial advisor gives you: put money away till it hurts, right? All right. Epic Hamster giving us $9.99. Am I supposed to split this all with Loren since he did half the work today? So if you guys are interested in speaking to Loren about financial planning, don't hesitate to contact him. His email address, or at least a way to contact him, is actually in the description. So
Isaiah Castillo says, thoughts on Neuralink. So if you notice, not much has been said about Neuralink since the initial announcement that came out about it. This is my worry with Neuralink, is that it was announced way before it became really commercially viable. I'm hoping it doesn't go the way of something like Google Glass, which I thought Google Glass was going to be one of the greatest products ever, but it ended up getting dropped. No one remembers it now, but it was. I thought it was going to be amazing, and now it's been, the whole idea has been discarded. So I'm a little bit worried about Neuralink because I haven't heard much about them since the initial announcements were made. So yeah, and you see, Epic Hamster says this information is gold. Thank you guys. Loren, you have been a great guest, man. People love you, and
Hey.
yeah. So
thank you,
Loren,
all. I mean, glad to be on the show.
what I want to ask you now is trends when you talk to investors right now. So you know what a lot of people want to know? A lot of people want to know on my channel, they have money, they have some money. A lot of them are probably rich and they don't realize it. But talk to me, Loren, what do rich people want out of a relationship with a financial advisor? What do they want?
I think more than anything, of course, you want some returns. You want to know that, you know, the person that you're working with is able to earn their keep by making you money. But I think the number one thing that they want is someone to work with, someone that they're like-minded, someone who shares their goals, someone who they feel understands them. I think that's much more valuable than the types of returns that an advisor can show that they've made for their clients over the past 10 or 15 years.
I agree with you. Returns are determined by the market. Like 90% of it's the market. Only 10% of it is actually the choices that the advisor is making with the client, right?
I mean, there are so many. You brought this up. You touched on it just a few minutes ago, and that's with investors doing the wrong thing at the wrong time, or sometimes the right thing at the wrong time. I mean, when we had the market, the pandemic crash, everyone wanted to sell, right? So hopefully, if the people who have advisors, if their advisor hopefully said don't sell, they listened to that advisor because they trusted the advisor.
Right.
They knew that the advisor was on the same page, and the advisor was looking at something that they didn't see. And then the average investor had an advisor, hopefully, who said about their advisor, "Hey, I don't see what this person sees. I don't see why I should hold on, but I'm going to listen to them because they know who I am and what I'm trying to accomplish." And if they did listen to their advisor, who told them not to sell, they're a lot ahead of the game.
Yeah. Now, if you think about it, the last pandemic that we went through in the last like real devastating pandemic, which is the Spanish flu, that actually happened at the tail end of World War I as well, where we had a wind down of industrial capacity, millions of people coming home to what looked like would be no jobs, right? I mean, well, hundreds of thousands of servicemen, millions of people who were suddenly out of the armaments business, and we had a pandemic at the same time. That should have been a recipe for economic disaster. It was not a recipe for economic disaster. It led into the roaring 20s and one of the greatest economic expansions we had until the 1990s, right? And actually, you were one of the ones that pointed this out to me when we started talking about this back in like March of 2020. I was fortunate and had a good deal of money on the sidelines, right? By just by sheer coincidence. It happened when I had a lot of cash, and I knew that was my moment. That when a lot of money was getting out, and then this is right before all of the government benefits started, and you saw a lot of people had that extra $600 a week, and people started investing. Man, I bought up so many shares of things that I knew were going to do well in the future that weren't going to be tied to going to the office or anything like that, man. And but I knew that was kind of a once in a lifetime opportunity. Now I think investors should be their expectations should be a little bit more aligned with what is normal in the market, which is if you're all stocks, a 10% return, you should probably be pretty happy with that in your portfolio.
Right.
Whereas we're all spoiled now. We've had a couple years of really good returns, and now we're all very spoiled. So
yeah, what's the saying? One of the worst things that can happen to an investor is when they start investing, they make money.
Yep.
They don't know what it is to lose, so they have that expectation. Hey,
yeah, and those are people that invest, and then when the market goes down, they sell their stocks. They say stocks are terrible, and they never own stocks again. And we all know those people. So let me see here. The Epic Hamster says, "I'm not happy with my financial advisor. What should an advisor be doing for me?" Really, I feel like that's a conversation you should be having with Loren. So I'm here plugging it. I'm plugging it.
Email me or call me. We can have that conversation. I mean, in short, the very fact that you're asking that question means something's wrong.
Yeah.
Again, the advisor should be making money for you, but they should be looking out for you and making sure that that they're meeting your goals.
Yeah. So the relationship that Loren cultivates with his clients is quite a bit deeper than, say, your Merrill Lynch advisor or your JP Morgan advisor or something like that. It really is a financial planning led relationship first, which is different than just an investment advisement relationship, right? So if you go on the website clientfirstcap.com, and that's included in, I think that's included in the description information as well, you can kind of see what his company does. And I just to be honest here, like, I consult for that company as well in terms of financial planning. I do financial planning on the back end for them. So I'm not, if you end up going with them as a client, I'll end up getting some of that work. So of course this benefits me too. I want to be completely honest about that. But that is the issue with that is his relationship is led from a financial planning aspect, where they make an effort to understand your estate planning needs, your investment needs, your insurance needs, your needs to fund future goals, which I think is very, very important. Your needs to fund future goals. How do we model that in a financial plan to let you know whether or not you're on track or you're not? Of course, I'm really biased because all I do is the financial planning. And he's really more of the face of those relationships. And so I would encourage you to have a conversation with Loren. He could be the best person in a private conversation to tell you what it is that you should expect from a financial advisor. Let me see. Do you think, this is a great question here. Do you think Facebook will lead in building the metaverse? Who would be their competition? So Isaiah, absolutely. I think that Facebook is going to very quickly take the lead in terms of a metaverse. I think that Facebook is going to make this transition from what they are now to a metaverse. They are looking at hiring something like 10,000 engineers in Europe working on their metaverse projects right now. That came out in an article that I read on Yahoo Finance like 2 days ago or something like that. So that is, I absolutely think that they are, like, I still think that there's future value in Facebook, even though they're kind of a hated company right now. They are a money-making machine. I am a little bit surprised that people didn't realize that they value profits over the health of people, because that's what companies do. It's called capitalism. A company's only business is business.
Apple may be a prime challenger.
I think so too. But there's a number of metaverses that already exist out there. Like Unity Software has one. Epic Games it has one. We're looking at Decentraland, Earth 2. All these out there. Once again, I think we're not going to have a metaverse. We're going to have multiple metaverses. We're probably looking at blockchain technology being used as the bridge between metaverses to transfer value from those disparate labor platforms. And we're definitely looking at NFTs facilitating that as well. How that happens, nobody knows, which is another reason why I think you should pay very close attention to blockchain technology. Not just cryptocurrencies and the value of the coins, but pay attention to smart contracts and blockchain technology. So here's another good question. Is there a way to know when insiders sell or buy stocks?
There is a way to know, but usually when you know, it's too late to take advantage of it.
Yeah, I think they have 10 days to file a Form 4, right?
Right.
Yeah, I think it's 10 days. They file something with the SEC if they're an insider called a Form 4, but I think they can wait up to 10 days after they've done that to do that. So, yeah. And then a lot of times they announce, though, that they're going to do like regular sales. So it's not a surprise. Like they sell a little bit every month or something like that.
Yeah, when a large investor or owner of stock, sells, they have to, it becomes public. A public,
Right.
you know, you just have to be able to be in tune and find it.
This is a good one for you. So Bob Johnson says a great advisor isn't the one that finds you the best stocks. So don't confuse gains with good advice. The value is in how they help you plan your money and help you with avoiding traps and inefficiencies.
There you go.
That is true. I can tell you that in my career as a financial advisor, a lot of what I have done is really being an amateur psychologist, which is convincing people to look at a longer time horizon. People are not built to be long-term thinkers. We're not built to consider the future. Right? This is an idea like delayed gratification is something that is learned, and a lot of people don't learn it. Also, the ability to plan for the future is something that you have to learn at a young age, or it's very difficult to learn it later in life. And here's a weird phenomenon too. It hurts more to lose 10% on an investment than the pleasure that you get out of making 10% on an investment. And that is the huge psychological burden that every investor has. And it's very human. It's something that we have a hard time escaping. And this is one of the big challenges that every financial advisor has, is saying you have to consider the losses in your portfolio or in any one sector in the wider context of what your overall goals are, right? So, yeah.
And that's very important. It's also to appreciate your gains.
Right.
It also is true, I think, a lot of times when someone invests in something and the thing goes up, a stock or what have you, and it goes higher, they're not really that appreciative of it. It's like the old adage that no one ever bet enough money on a winning horse. It's always, you know, I should put more money in it. You can't look at it like that.
Yeah. So it's kind of weird. I haven't heard that phrase since I was really, really young. So I actually grew up and knew a lot of people that raised quarter horses for racing. And I haven't heard that phrase probably since I was in high school. So yeah, no one ever complains about betting too much on a winning horse. So that's great. So yeah. Let me see here. You probably answered this before, but what are your thoughts on Ripple and XRP? I actually don't have any thoughts on Ripple and XRP. It's not one of the cryptocurrencies that I follow. I just don't. It's just one of the things I haven't gotten around to. And White Wolf says, now that Facebook has a stable coin, they are literally a money-making machine. That's true. They're literally a money-making machine. Yeah. But anyway, I think that is enough for today. You're starting to look a little tired there, Loren. It's about 3 hours ahead of our time here.
Yeah.
And, this is Loren's very first live stream. And I'm actually really impressed with your performance. I want to have you on. I want to make this more regular, where I have my advisor friends come on and talk about their thoughts on the economy, their thoughts on what's going on. So So, and Keith X, I saw your question. I'm probably going to make a video on how to stake. And it's different for every cryptocurrency, and there's a number of different ways to do it. So, so governance staking with Algorand is very different. Like, somebody actually mentioned that on a live stream before, and I did not know what they were talking about, and he sent me all the information to learn about that. So yeah. But anyway, I want to thank you, Loren, for coming on to the broadcast here. I've had a great time. We have to do this again sometime.
Hey, thank you for having me. Hopefully I was able to add some value here.
Yeah, and thank you everyone anyone that sent in super stickers or super chat or anything like that. I want to thank you so much. It really makes us a lot of fun. It kind of gives me a little kick out of answering questions. You never know if someone's gonna. It's just one of those things. But really enjoy it. Anyway, I'm gonna go ahead and end the broadcast now, guys. As usual, I'm starting to get hungry. All right. Thank you so much.
Thank you, everyone.